All right, let's break down the big earnings call from Spectral AI. The company is staring down a massive, game-changing catalyst, but the market's reaction to their latest numbers was, let's just say, a little cautious. We're going to dig into exactly why that is.
Okay, so here's how we're going to tackle this. First, we'll hit the Q3 scorecard, the hard numbers. Then, we'll get into management's story and how they're pitching this as a bridge quarter. After that, and this is crucial, we'll map out their path to commercialization. And finally, we'll wrap it all up with our official take in the next call.
The first number to flash across the screen really set the tone for the whole report. An earnings miss of 5 cents per share, not what the street wanted to see. And then came this number, which was even more of a shocker. A 54% drop in revenue compared to this time last year. You put those two together, and it's no surprise the stock took a little 3.5% hit in after-hours trading. So let's get into the nitty-gritty of the official numbers. This whole quarter was framed as a period of transition, and you can really see that tension playing out in the financials. Now, looking at the table, yeah, it's straightforward misses on both revenue and earnings. But here's the thing you absolutely have to understand. The why is more important than the what. This drop in revenue isn't because of a lack of demand. It's a deliberate pivot away from their government R&D contract work as they gear up for the commercial launch of their DeepView system. And this chart just perfectly captures the short-term pain of that big strategic pivot. Management had to cut their full-year revenue guidance by $3 million. They pointed to the timing of government reimbursements and some hiccups from the recent government shutdown, but they were quick to add that they expect to get that revenue back in 2026. So how did management explain all this? Well, they moved quickly to frame the quarter not as a setback, but as a necessary step forward, a bridge to their commercial future. The chairman, Dr. Jatayo, gave investors this really simple three-part mantra to hang on to: finance, focus, and finish. It was basically his way of saying, hey, don't get bogged down by the dip in R&D revenue today. Look at where we're going tomorrow. So what does that mantra actually look like in practice? Well, first, finance. They bulked up the balance sheet. They've got $10.5 million in cash, plus they just raised another $7.6 million. Second, focus. They hit their biggest milestone yet, getting that FDA application for DeepView submitted. And third, finish. It's all hands on deck getting ready to launch in the US the second they get that green light. And that leads us right to the heart of the entire Spectral AI story. I mean, everything, and I mean everything, now hinges on a single massive event: getting that FDA clearance. They're going after this clearance through what's called the De Novo pathway. It's really important to know what this is. This isn't just for another Me Too product. This pathway is specifically for brand new, first-of-their-kind technologies like DeepView. If they get cleared, they don't just get a product on the market. They literally create a whole new category of medical device. It's a huge deal. This timeline is basically the roadmap for every investor. The application is in. The big date to circle on your calendar is the first half of 2026. That's the window when they expect to hear back from the FDA. If it's a yes, they plan to launch in the US immediately. That's the moment this company officially flips from an R&D story to a full-blown commercial growth story. Okay, so you put it all together, you've got these near-term financial struggles on one side and this enormous binary catalyst coming up on the other. So how in the world are you supposed to think about this stock? Well, here's our call. The investment case here is just incredibly clear-cut. The bull case is simple, right? FDA says yes, and boom, you've got a first-in-class device that could see explosive growth. The bear case, though, is just as simple. They're burning cash while they wait for that decision. Any delay from the FDA is going to hurt, and building a sales team from scratch is no small feat. So, after weighing all of that, we're initiating our coverage with a market perform rating. And look, I know that can sound like we're just sitting on the fence, but the reality is this FDA decision is so binary, it's either a home run or a strikeout, that the risk and reward are just too evenly balanced right now to call it anything else. So, what do we expect from the stock itself? Probably a lot of sideways, choppy action. It's going to react to every little rumor or headline about the FDA. But as we get closer to that decision window in early 2026, you can bet that volatility is going to ramp up big time. For anyone looking to play this, one plausible idea could be to use long-dated call options. It's a way to capture that massive potential upside if they get approval, while also strictly defining your risk if the news is bad. And as always, this is not financial advice. So we've gone through the quarter, we've laid out the road ahead, but at the end of the day, the biggest question is still out there. Is this a calculated bet on game-changing technology, or is it a huge risk that investors aren't being paid to take? That's what the market is going to decide over the next few months.